Good evening. Here is the latest update from the global financial markets. Major banking institutions have raised their forecasts for gold prices, signaling the potential for a significant move in the precious metals market. According to the latest reports, several leading banks have revised their outlooks upward, adjusting their price targets for gold amid current market conditions. The updated forecasts reflect changing expectations within the financial sector. These revisions come as analysts at major institutions reassess key economic indicators and market dynamics influencing gold's performance. While the article does not specify individual bank names or exact figures, it confirms that multiple large financial institutions have increased their projected price levels for the metal. Gold, widely regarded as a benchmark asset within global markets, continues to draw attention from institutional analysts. The revised projections suggest that these banks anticipate stronger price performance than previously estimated. The adjustments mark a notable shift in outlook compared to earlier forecasts. Market participants closely monitor such revisions as major banks play a significant role in shaping investor sentiment. When leading financial institutions update their targets, it often signals a reassessment of broader market conditions. In this case, the upward revisions indicate that analysts now see the possibility of a substantial price movement ahead. The report highlights that these forecast increases are aligned with recent trends observed in the gold market. However, it does not provide additional interpretation beyond the confirmed revisions by the banks involved. The focus remains on the fact that price expectations have been lifted, pointing toward what is described as a potentially massive move in gold prices. As financial markets absorb this development, attention is turning to the detailed factors behind these revised projections and the specific data influencing the bank's updated outlooks. We now turn to a closer examination of the first half of the detailed breakdown behind these revised gold forecasts. In the first half of the detailed breakdown, the report explains that several major banking institutions have formally revised their gold price forecasts upward, reflecting updated assessments within their research divisions. These revisions are based strictly on internal evaluations conducted by the bank's analysts, who periodically review market conditions and adjust their projections accordingly. The article confirms that these institutions have increased their expected price targets for gold compared to their previous outlooks, marking a clear change in forecast direction. According to the report, the revised forecasts were issued following comprehensive reviews of prevailing financial data and broader market activity. The bank's research teams analyzed current price movements, recent trading patterns, and macroeconomic indicators before determining that earlier projections required adjustment. The article emphasizes that the changes were not minor refinements, but notable upward revisions, indicating that analysts now expect gold to perform at higher levels than previously anticipated. The report also notes that these updated projections were communicated through official research publications released by the banks. These publications outline the new price targets and explain the rationale for modifying earlier estimates. While the article does not disclose specific numerical targets or name the individual banks involved, it confirms that multiple prominent financial institutions participated in raising their gold outlooks within a similar time frame. The timing of these forecast revisions is also highlighted in the article. The banks issued their updates amid ongoing developments in global financial markets. Analysts conducted reassessments in response to evolving market conditions, prompting them to recalibrate their expectations. The report makes clear that these actions represent standard forecasting adjustments carried out by institutional research teams as part of their routine monitoring of asset classes. In addition, the article underscores that gold remains a key asset tracked by large financial institutions due to its role within global investment portfolios. As a result, changes in official price forecasts from major banks tend to attract attention across the financial community. The report states that the revised projections suggest the potential for a substantial move in gold prices based on the bank's updated analyses. Furthermore, the article explains that institutional forecast revisions often influence broader market discussions. When multiple major banks adjust their outlooks in the same direction, it can signal a broader reassessment within the financial sector. In this case, the collective upward revisions indicate that analysts across these institutions now share a more optimistic price expectation for gold compared to their earlier projections. The report maintains a factual tone, emphasizing that the revised forecasts are grounded in the bank's evaluation of current market data rather than speculative commentary. It reiterates that the upward adjustments reflect updated research findings, not external assumptions. The focus remains on the confirmation that significant financial institutions have raised their gold price targets and now anticipate stronger performance relative to prior estimates. As the article continues, it moves into the second half of the breakdown, examining additional context surrounding these revised forecasts and how the updated projections fit within the broader financial landscape. Continuing with the second half of the detailed breakdown, the article further explains that the upward revisions to gold forecasts were presented as part of broader market outlook updates issued by the bank's research teams. These updates were incorporated into regular investment strategy notes and commodity outlook reports distributed to clients and market participants. The revised projections for gold were positioned within the wider context of asset allocation guidance and macroeconomic assessments, reflecting the bank's structured analytical approach. The report states that the banks adjusted their gold targets after reassessing prevailing financial indicators and recent performance trends in the precious metals market. The revisions were described as meaningful increases over prior estimates, signaling a recalibrated expectation for gold's trajectory. Although the article does not provide detailed figures or specify the magnitude of the projected move, it clearly indicates that analysts foresee a substantial price shift compared to earlier assumptions. The article also highlights that such forecast adjustments are part of an established process within major financial institutions. Research analysts routinely review commodity markets and update price targets when data or conditions warrant a change. In this instance, multiple banks reached similar conclusions, leading to synchronized upward revisions in their gold outlooks. The alignment of these updates is presented as a notable development within the financial sector. According to the report, the revised forecasts were communicated without speculative language or dramatic framing. Instead, the banks outlined their updated expectations in formal research documentation. The article emphasizes that the changes reflect professional analysis based on available information at the time of publication. No additional commentary beyond the confirmation of higher price targets was included. The report further notes that gold's position within global markets continues to attract institutional focus. As a widely followed asset, gold is subject to continuous evaluation by major banks and investment firms. When forecast revisions occur, particularly when several institutions adjust their targets in the same direction, it draws attention from investors and analysts monitoring commodity trends. Importantly, the article does not introduce new external factors or predictive scenarios beyond what was formally stated by the banks. It confines its reporting to the fact that significant financial institutions have increased their gold price forecasts and indicated the potential for a large price movement relative to earlier projections. The emphasis remains on the confirmation of raised targets rather than on interpretation. As the detailed breakdown concludes, the focus shifts towards summarizing the overall development and reiterating the key points outlined in the report. We now move to the final summary and closing remarks. In summary, the report confirms that several major banking institutions have raised their forecasts for gold prices, signaling expectations for a significant move in the market. These revisions were issued through official research publications and investment outlook updates, reflecting updated assessments conducted by institutional analysts. The adjustments represent a clear shift from earlier projections, with banks now setting higher price targets for gold based on their latest evaluations. The article makes clear that these changes followed comprehensive reviews of prevailing financial data and recent market performance. Analysts reassessed existing conditions and concluded that prior estimates required modification. While the specific figures and individual institutions were not disclosed, the report emphasizes that multiple large banks revised their outlooks upward within a similar timeframe. This alignment highlights a broader recalibration within the financial sector's view of gold. Importantly, the article remains focused on confirmed information only. It does not introduce additional speculation, external interpretation, or forward-looking assumptions beyond what was formally communicated in the bank's updated forecasts. The emphasis stays on the factual development that official gold price targets have been increased and that analysts now anticipate stronger performance compared to earlier expectations. Gold continues to be closely monitored by major financial institutions, and adjustments to price forecasts are part of standard research procedures. In this case, the upward revisions have drawn attention across market circles due to the scale and consistency of the updates. That concludes our coverage of this development in the gold market. Thank you for watching.